Hello family, thank you for tuning into this video today. I'm going to be diving into Bundaberg to do a property market update for you guys. I'm super excited to bring this one to you. So I suppose if you're a home buyer or an investor, I believe this video is for you because I think it's going to give you the insight you need to diagnose what's going on in the marketplace right now and determine whether or not it's ready for you to get into in 2025. So I'm going to be diving in and looking at the demand and supply side metrics of the market and trying to then form an hypothesis around what's likely to happen in 2025 and beyond. Hopefully that should be enough for you to be able to go, yep, let's pull the trigger in buying this house in Bundaberg right now if we're moving from interstate, or buying that investment in Bundaberg if you are looking to build your investment portfolio here in regional Queensland. Stick around, guys. I think you're going to get some tremendous value. Now, before I dive in, I'm just going to give myself and the business a plug here. So for those that don't know me, my name is Troyson Bassini. I'm the owner and head of research of Capricorn Life Buyers Agency. Capricorn Life Buyers Agency is actually one of our subsidiary brands under the Life group of companies. So I own Capricorn Life that services Central Queensland, Rockhampton, Bundaberg, Mackay, and Gladstone. And then I also own Tropical Life, you would have seen in my other content, which services Cairns, Townsville in the North Queensland region. And pretty much, yeah, we're just a buyer's agent that works on the ground in these markets. So we're not sitting in front of our desktop computer in Sydney and Melbourne and trying to buy from those areas into these regional markets. No, we have boots on ground, and the service we offer is designed to help a lot of people that are struggling to buy an investment or a home in these markets across regional Queensland. We work with a lot of investors that want to use and utilize local knowledge to get them the best assets that outperform the market here. And then we want to help those that also want to get access to pre and off market deals and try and buy deals in isolation of competition where you can potentially make 4, 5, 6% instant equity on the way in. So we do a ton of those sort of deals throughout the year in regional Queensland. So I suppose if you are an investor that falls into any of these categories and want to explore the prospect of potentially working with us, feel free to give us a call on that number, visit us on that website, yeah, you can check us out on our socials as well. I've got my own social media handles as well. You can check me out at Regional Queensland King on TikTok and Instagram as well. Cheers, guys. Let's go. Now, as I said before, I'm going to be looking at a series of data on the supply and demand side of the market here in Bundaberg, and then we're going to use this data to form a hypothesis around what's currently happening in the market, and then form a hypothesis around what's likely to happen in 2025 and beyond here. So these are the various metrics we're going to be looking at today. I'm going to start off by analyzing the median house price change and what's happened over the last 12 months, what's been the trend over the last 12 months, and what's been the trend over the last few months as well. And you'll see a series of graphs that we're going to use to establish what that trend has been exactly. We're going to look at the demand and supply side of the market, and by looking at supply, we're going to look at the stock levels and listing volumes, and that would also include what the inventory pool also looks like as well, and whether or not supply is increasing or supply is decreasing will remain the same. So we'll get a really good understanding of what's happening on the supply side of the market. Then we're going to peek our head over into the demand side of the market, and the key demand side metrics we're looking at is days on markets and absorption rates. So those days on market numbers and absorption rates are really going to paint a picture as to whether or not demand is strong or slowing down, or it's completely gone missing here in Bundaberg. And then once we establish what's happening on the supply side, what's happening on the demand side, then we can really diagnose and temp check what exactly is going on, and then try and form an hypothesis around what's likely to happen in 2025 and beyond. Then we're going to have a look over on the rental market as well. I think that's going to be really important for property investors looking at, chasing attractive yields. A lot of people are coming into regional Queensland to capitalize on high yields, so that's really important. So we're going to have a look at the Bundaberg rental market. Is rentals prices increasing? Are vacancy rates, dropping or remaining constant? The vacancy rates rising. So we'll get some really good insight around the rental side of the market. And then we're going to have a look at the pipeline of new supply. Pipeline of new supply has an impact on what's likely to happen in the market in the future. Obviously, people are going to be investing in these markets and investing for long term. So you want to look at that 3, 4, 5 year, 10-year horizon and what's likely to happen from that perspective. And new supply is a really good indicator to see what's likely to happen in that marketplace, because if there is a whole bunch of new supply in that pipeline, particularly in Bundaberg, and you hold an investment there, is that going to have a significant impact? So we want to really analyze what's happening on that supply pipeline side of the market as well. We're going to look at some key data around what's happened over the last financial year and the previous financial year, and compare those trends against each other, and yeah, make some assumptions around how your investment or the market in general is likely to perform going forward. And then I'll just pretty much give a summary around my hypothesis and the predictions for 2025. Okay, let's start off by looking at the median house price in Bundaberg currently and what the median house price has experienced over the last 12 months. So we can see here that the current median house price in Bundaberg as of January 2025 is currently $628,000, up from $550,000 in January 2024. So essentially the median house price has grown in the last 12 months by 14.1%. So as you can see here, this red circle is the point in time which we are now, January 2025, at a median house price of $628,000. So there you have it, guys. Over the last 12 months, Bundaberg has experienced significant growth and has exceeded single-digit growth, growing of a total of 14.1%. So look, that's obviously a good thing. If you were an investor or a home buyer that bought 12 months ago, you would be, making upwards of $55,000 potentially there in capital growth over the last, 12 months. But coming back to 2025, I know a lot of people want to buy now and hope that this market continues to surge along so they too can reap the rewards. Couple of things from me, like for those that are new to looking at the data in Bundaberg, or haven't necessarily dived into its track record, just to put it out there, Bundaberg over the last 5 years has already grown 100%. It's grown 100%. So going back 5 years ago, the median house price was around $320,000. It's now upwards of $600,000, means the market has virtually doubled there in terms of its overall median. And look, I'm under no illusion that it's doubled, and I'm just putting it out there, right? But me putting it out there, I'm not doing that to alarm you that, hey, Bundaberg is now past its peak or it's got nothing left in the tank anymore. No, I'm just saying that, hey, it's had a really good run. But over the last 12 months, despite that, virtually doubling over the last couple of years, it's still growing, right? It's a market that's still growing. And look, there are a number of things that have caused this to happen. I think the biggest one is obviously it all boils down to supply and demand in the end. But I do think there's a number of other things that are woven into that is causing that imbalance between supply and demand. For the last decade, the Bundaberg economy has been very healthy, right? Its GDP output has really contributed to the Queensland average, particularly when it comes to the production of food, right? It's a massive food bowl and has a big contribution to Queensland's GDP output. I think the job rates as a result of that healthy agricultural sector have been really, really low. The unemployment rates has sit well below 3% in Bundaberg now for a long period of time. Population movements have been really, really strong. Lifestyle drivers have been really good, and then also that affordability factor. When in comparison to, let's say, southern markets and interstate, a lot of people have pushed into markets like Bundaberg purely because of its affordability factor as well. It's offered a lot of good things for those that want to work remotely, but also want to fast track their retirements as well. Particularly the east coast of Bundaberg and markets like Bargara, Elliott Heads, Coral Cove, Innes Park have been very popular for that lifestyle market. So I think that has all played its role in fostering this median house price to virtually have 100% growth over the last 5 years. Now, going forward, I think what's key for Bundaberg in terms of the growth rate to continue to sustain the rate of, as to what it is, double-digit growth. I think the demand and supply side of the market really needs to stay intact. I still think you need a market where supply is really low and demand is strong for this median house price to continue to surge along, because all of those other macro factors are still there. Unemployment is still low, GDP output is still strong, the economy is still pumping, right? lifestyle and affordability is still there, I think, when compared to other markets. So at a macro level, all of the things are still looking good for Bundaberg. And I'll do a separate market update for those that want to see as to what's going on at the macro level, like investment and things like that, infrastructure spending, the economy. We can take a deep dive into that, but I'll do that in another video. But in a nutshell, all of that is pretty solid at this point in time. But now for there to be a big year in 2025 and beyond, I think it really comes down to that demand and supply side of the market because, yeah, we've seen tremendous growth here over the last 12 months, that's for sure. But I do still think, but basically by looking at some of those high macro factors, that Bundaberg is, in a really good position going forward because a lot of those macro factors are still current. But in terms of the micro level analysis now around demand and supply, I can't really make a call just yet around what's likely to happen in 2025 until we move through the rest of this presentation. But in saying that, I think, yeah, it's still a very affordable market. And even when you benchmark it against these other big regional Queensland hubs, Bundaberg still has a lot of good things going for it. And from a price perspective, it's still very affordable, not only against all these other regional Queensland hubs, but against the broader national average when compared to the capital city markets and also some of the other sub-regional markets around capital cities as well. And lastly, just for those that are looking to invest into Bundaberg, just be mindful that this is the median house price here of $628,000. Obviously, there are many suburbs, particularly on the East Coast, the more upmarket suburbs, that are a lot more expensive to get into than $628,000. So don't use that as, oh, I can just go into Bundaberg and buy virtually anywhere. No, $628,000 might only buy you into, only a handful of suburbs as opposed to some of the more upmarket areas. So I think, yeah, just be mindful of that when you are going into Bundaberg, and yeah, and always ensure you're doing your individual due diligence on each suburb before you are looking to invest. Now, I said earlier, for Bundaberg to have a big 2025, right, what we need to see is a low supply, high demand environment because all of the other macro fundamentals and drivers for Bundaberg are looking very good, right? So we're going to start off now by looking at the supply side of the market. And obviously what we want to see here from the supply side of the market is the trend where supply has been going down or remaining the same relative to demand. So we're going to have a look at that now for Bundaberg. So we can see here that stock levels are currently sitting at 0.2%, which means that there are approximately 137 houses currently listed for sale in January 2025. And listing volumes compared to this time last year are the same, right? So there were about 137 listings this time last year, which goes to show what I said before. We want to see a trend where there is stability, right? And for the most part over the last, I would say going back 2.5 years now, we've seen stock levels average out of around that 0.2%, which means that the market has been relatively healthy from a supply front. What we don't want to see, particularly if we are looking to invest in markets like this, is a spike in supply, right? Where we see a trend line starting to go up, right? We don't want to see supply going from 0.2 up to 1% or 2% and above, because that speaks to me that, hey, we're starting to move into a market where there might now become an imbalance where supply is actually greater than demand, and we'll meet that. When there isn't that imbalance between the two, obviously, that can cause the median house price to potentially slow down, retract, or go backwards. So what the good thing about the supply levels in Bundaberg is that we're not seeing that. And for the last 2.5 years, as I said, we've seen this trend, remain around that 0.2%. And look, just so you know, a healthy market in terms of having healthy supply levels generally sit around 2%. So any market that has supply levels around 2% was what many would call a healthy market, right? Supply at a good level. Here where it's at 0.2%, that's extremely unhealthy. Unhealthy in the sense that it's very, very low, and it has been very, very low for the last 5 years. As you can see here, it's sat well below 1% for the last 5 years. And that's what's definitely played into the fact that Bundaberg has almost, experienced, over 120% growth over the last 5 years. And this is definitely played a role in that. And as you can see, like despite Bundaberg having a couple of huge years, we're seeing supply get even lower and lower. And look, what's causing that is obviously, as demand picks up, vacancy rates start to go down. Vacancy rates plays an impact in terms of how people are behaving in the marketplace. Particularly if you're selling a home in and around Bundaberg, you're not necessarily going to sell your house and then find a rental because you are in a low vacancy rate environment. I think that definitely plays its part. And then if you are a local seller in Bundaberg, you're not going to necessarily sell and then buy back into a heated market. Yes, you might be selling at a premium, but then you're also buying back into a premium. So those two factors causes a lot of people to not even sell at all. So that can definitely put a lid on overall supply levels. And then we are in an environment, right, where construction isn't there at all, right? Construction doesn't exist right now, not only nationally, but also in Bundaberg. Like the pipeline of new supply is virtually non-existent. We're only seeing a small number of new listings in terms of new construction coming to the market each year. And it's not what it was, going back, the last 10 years or beyond, where there was really strong building approval data. We just don't see that right now, not only in Bundaberg, but across Australia. And that largely boils down to the construction sector being in a crisis. It's very, very expensive now to do new construction. Materials, labor is expensive. A lot of people have lost confidence in new construction now with builders and developers going bankrupt. So what you find is first home buyers are reluctant to even build their dream home now. They're more moving towards established dwelling. So all of that is really putting a lid on overall stock levels. And as I said, I think for Bundaberg to maintain its double-digit growth in 2025, you need to see low stock levels, right? And I'm really happy with what I'm seeing here. I've seen a consistent trend. It's actually decreased over the last 5 years. The trend's going down, and it's pretty much maintained a really healthy trend over the last 2.5 years as well. And I think, going forward, if this remains and demand is high, we're likely to still see, really good growth here in Bundaberg. Now, the next supply side metric we're going to be looking at is the inventory pool. So for those that are unfamiliar with the term inventory, pretty much that is a separate thing to listing volumes and supply. So supply, what happens from a supply point of view is that new listings come on every single month, but then new listings are also sold every single month, or a certain percentage of those properties are sold each month. So that always leaves a residual amount of properties that aren't sold each month. So 10 properties might come on each month and then 5 of them sold. So that means that 5 roll over to the next month. And what happens is as time rolls on, it forms a pool of properties. And obviously, the larger the pool, that means that there is a whole lot of properties available there for purchase. But the smaller the pool, that means that we're in an environment there where supply is really low and there's only a small pool of properties there that are available for purchase. So you're in an environment, you generally know you're in an environment there where demand is exceeding supply, if there is a big pool or a small pool. So let's have a look at Bundaberg now. So we can see here that the current inventory levels sit at 1 month, and the long-term trend still sitting around 1 month. So if you follow this graph here, you can see at that red circle there, we are at 1 month / 4 weeks. So what that means is, right, 4 weeks, all that means is out of that pool of properties there, the ones that aren't selling each month, that forms this rolling pool of properties. Let's just say if there was to be a slowdown or a complete stop, right, in the amount of new listings coming to the market, if the market became redundant and there's no agents out there signing up properties and signing up listings and getting them sold, right? If that stopped, it would take roughly 4 weeks right now for all of those properties in Bundaberg to be sold, right? So for that metric to sit around 4 weeks suggests to me that overall supply levels are really low, right? So any market generally that have inventory levels around 3 months is a healthy market. But again, similar to the stock levels, we are in an unhealthy market here, which is actually a good thing from an investment perspective, but it's not necessarily a good thing if you are looking to buy, because that just means that the options or the pool of properties is very small to pick from. So that often means that you're in a situation where you are competing with other bidders. And obviously that competition is what's putting a rocket up that median house price. So look, this is a trend that's been this way for the last 5 years. It's been very unhealthy. And look, I think for 2025 to have another big year in terms of strong median house price growth, it needs to remain this way, right? And look, we've seen it drop over the last 3 months there from back in November. It's dropped down and then it's sort of jumped back up. But the good thing is that it's still well and truly, around that 1 month or 4 week mark. Some other markets across regional Queensland are as low as 2 weeks or even 1 week in places like Gladstone, just up the road. So that, to me, suggests that I think Bundaberg is looking good from a supply side. Like looking at these two metrics, listing volumes, stock levels, and inventory, Bundaberg is in a really good position here. And if supply remains this way and demand exceeds these supply levels, the market is likely to experience double-digit growth again going forward. So yeah, guys, I'm really happy with this inventory level in Bundaberg. All right, now let's turn our attention to the demand side of the market. And as I said before, in order for Bundaberg to have another big year, we need supply levels to be low and demand to be strong, right? We need that imbalance to cause that house price friction. Now, the demand side metrics we like to look at is days on market and absorption rate. So we're going to go through days on market first, and that's a really good demand side metric to evaluate what demand looks like in the marketplace. And basically, for those that are unfamiliar with the term days on market, all that means is how long is it on average taking for properties to be liquidated there in the marketplace. And obviously, the lower the day on market number, the better, which suggests to me that the market is in a hot, heated environment where things are transacting relatively fast. Obviously, the higher the day on market means that properties aren't changing hands there as fast, which suggests to me that we might be in a market there where demand isn't necessarily as strong, right? So we can see here that the day on market for Bundaberg currently sits at 75 days in January 2025, and it has had a huge spike from the 40-day average throughout 2024. Ooh, okay, this is interesting. So currently sitting at 75, and it spiked from a long-term trend throughout 2024 to from 40. So that's a total of what, an extra 35 days there, like it's taking now in the month of January for properties to be sold. Look, it's a tricky one. To me, I think for now, I'm just gonna not look at that and more focus on that long-term trend, because for me, I want to start to see probably the next 2 months of market data to really determine if this demand is really starting to fall off a cliff. Because the reason why I say that is because what can generally happen around this time of year is that the days on market data can be skewed by dates of settlement, right? Or because of certain contracts and how they've been drafted over the Christmas period. So over the Christmas period, a lot of properties have had prolonged settlement periods. So you might have put your property under contract, mid to late December and settled early January or even early February for those that have put things under contract like late December. So you can see how that will prolong and skew this data when some of these settlement periods have been longer than 30 days to factor in for that festive period when conveyances were shut down, real estate agents' offices were shut down. So there have been a lot of sort of weird contract arrangements, and that can really play a role in skewing this data. So that's why I'm not going to read into it too much. I think I'd like to see another 2 months worth of data. And obviously, if February is coming in at 75 and March is coming in at 75 or 80, that's when I think we're in for a huge change in market conditions here, where demand is virtually falling off a cliff, because we've certainly seen that double-digit growth happen, and we've seen Bundaberg have a really good run over the last 5 years, and you can see that black dotted line there. It's had a good run because days on market have generally sat around that 40 and 30 days, right? And then obviously individual suburbs, as you do your individual research, you'll find that they vary as well between 30 to 40 days. So for that to happen now, a sudden spike to happen is alarming, because that can definitely throw a cat amongst the pigeons now when it comes to how this market is likely to perform going forward. And as I said, you don't want to see this trend happening, because that just means that what would generally go on the market right now in Bundaberg and go under contract within the first 1 to 2 weeks is now going under contract, I would say, in 4 to 5 weeks for that 75-day average to take place. So that means that something might go on the market right now and sell at the end of February and then settle at the end of March. So that means that day on market average is very, very long, right? And to me, that's an issue. And that to me suggests that demand here in Bundaberg could be really falling off a cliff. But I don't want to look at this in isolation of other months just yet, because it really bucks the long-term trend there, doesn't it? And that is a bit of a concern when something bucks the long-term trend. But I think it could be because of that festive period, and I'm going to really start to look at the next 2 months here closely to really determine if demand is falling off a cliff. And I think you should too, if you are an investor, because that is pretty alarming there. And obviously, if this occurs, that means that the longer properties sit on the marketplace for, the more discounting that actually happens. So that means that a vendor might put their property on the market for $600,000, and if it sits there for 1 month and they're not having any movement on that property, then someone comes in and offers 570, gets it $30,000 under list price, then that's a bad thing, right, when it comes to median house price growth. And obviously, if you have that happening in bulk, where a lot of people are getting properties at a discount, that means that the house price is retracting, not going up. So the median house price starts to go down. So this is an alarming thing, guys. So if you are investing in Bundaberg, please monitor this with caution over the next 1 to 2 months. Now, the next demand side metric we're going to be looking at for Bundaberg is its absorption rate. So all the absorption rate is, for those who aren't familiar with it, is basically we're going to measure how many properties have been listed in a certain time period versus how many of them have actually sold, right? And that creates a percentage. And obviously, the lower the percentage means that demand isn't as strong there, because all the properties that have gone to market, not all of them have sold, right? Whereas if the metric is a lot higher, that means that all the stuff that's gone to market during a certain period of time has sold, and that suggests to me that demand is strong, is healthy, right? So we're going to be looking at that now for Bundaberg, the absorption rate, and we're looking at 2 different time periods. So we can see here that overall, Bundaberg is experiencing a declining absorption rate currently of 55% from September 2024 to January 2025. So that 6-month period, we've seen a decline now in overall absorptions. And that's an alarming thing, right? And you can see here that it's actually slumping from 89% during January to June. So January to June is set at 89%, and then all of a sudden it slumped down to 55%. So that's a total of what? Close to 25% of properties now not selling at all, or never got sold during that time period. And to me, that's alarming, right? And if you see here like these exact figures, so we can see here that during September 2024 to January 2025, we had a total of 914 listings. We had a total of 914 listings, and during that same period, we had a total of 506 sales. And that's resulted in a current absorption rate of 55%. Oh, look, guys, I'm starting to worry now a bit when it comes to the demand side of the market in Bundaberg. We've seen a huge spike, that's bucked the trend in the rising day on market rates for January. And now we've seen a decline of its absorption rate over the last 6 months down to now 55%, dropping by what? Close to 25%, right? Overall decline in properties that have been absorbed by the market. Now, Bundaberg has maintained a really strong average of 80% and above for a long period of time, and that has said and it reflects that the demand side of the market is strong. And when the absorption rates were that high, that's when you could basically use as a prerequisite to say, hey, I'm in a market where demand is strong, and that demand is really going to cause that median house price friction because demand is high. And then we've looked at the supply side of the market. Demand supply is low, and that imbalance is causing house price movements. So now for this data to all of a sudden buck the trend, similar to the day on market data, suggests to me we might start to see the tides changing a bit here when it comes to the demand side of the market in Bundaberg. Now, if you are an investor, what that means is, look, you're probably not in a high competition environment anymore. So that's probably a good thing. It might allow you to get into the market a little bit quicker and a lot easier because there isn't this high absorption rate and because properties are sitting on the market longer than usual. So that creates a good opportunity for you to buy. Now, the downside to that if we are seeing a climb now in demand, where days on market are climbing and then absorption rates are declining, that could be a bad thing from a capital growth point of view. So it might open up a really good buy window for you to buy in, but then you might not be buying at the optimum time to get ongoing capital growth. So to me, I think there's a bit of a cloud hanging over Bundaberg right now by looking at the demand side of the market. And I think it's probably not at the optimum time to buy just by looking at these two data points, absorption rates and days on market, because we've seen both of them virtually fall off a cliff. And I think we need to see this happen now over the next 1 or 2 months for the data to become very reliable, to know that that trend is not a one-off isolated incident. It's actually really happening, and we're really starting to see demand on the decline here. And look, that's interesting to know, considering like Bundaberg, as I said, at a macro level is very healthy, right? The market, the economy, things are really, really good. Population movements are strong. Affordability and lifestyle are still there. Vacancy rates in terms of job vacancies are really low. So the economy is healthy, but we might see a change in taste now when it comes to, what buyers are doing, and a change in conditions in terms of what buyers are doing at a local level, at a micro level, when it comes to buying property now in Bundaberg. And look, this could have an adverse effect as well. As demand starts to taper off, then obviously people might not then go to market, because that could mean they're not getting the premium prices that they were expecting, so they could then withhold stock from the market. So this could actually have an adverse effect, and we might actually see Bundaberg still grow, because if this happens in the short term, people pull their properties off the market or not choose to go to market, supply might contract even more, and then that supply comes down relative to current demand levels. So that means that median house prices are likely to continue. But right now, based on the current supply levels and demand tapering off, I don't think it's enough right now to sustain ongoing price growth. I think it's really starting to maybe slow down now. We're likely to potentially see a slowdown within the first couple of months here in Bundaberg. So as I said, from a demand side of the market, I'm not liking what I'm seeing. I'm really liking what I'm seeing on the supply side. On the demand side, I'm not liking what I'm seeing, and I think we need to watch this data closely over the next couple of months before I think we pull the trigger on a market like Bundaberg. But again, this is Bundaberg as a whole, right? I'm only looking at this from a macro point of view. If you are investing, there are obviously individual suburbs that have absorption rates above 80%. Individual suburbs where days on markets are below 30 days. So that are red hot and ripe for the picking. But at a macro level, Bundaberg isn't looking good from a demand and supply point of view. So jump in and make sure you do your individual research on suburbs. And if this data starts to line up with what's happening in the broader Bundaberg marketplace, then that's when you probably start. No, it might not be the best time to invest in Bundaberg. All right, so we've had a look at the demand and supply side of the market for Bundaberg, right? We've evaluated that data. let's now put a pin on that, and hopefully I haven't scared you off potentially investing in Bundaberg just yet, because there's still some really good data we want to evaluate here. And we're going to start by looking at the rental side of the market, because I know a lot of people, when they come to regional Queensland and they look into markets like Bundaberg, not only one, they're looking at affordability, but number two, they're looking at places they can hold assets for that are close to paying themselves off, with those higher yields. And the rental trend and the vacancy rate trends plays a key part in the overall picture of that investment. So we're going to look at the median rental price trend now and what that's doing for Bundaberg. So we can see here that the median rent continues to follow the rising trend, now sitting at $489 per week for houses in Bundaberg. It's up $53 or 13% since January 2024. So over the last 12 months, it's done 13% and a total dollar value in terms of growth of $53. So we are in a rental market here that's rising, and it appears to be showing the signs of the long-term trend continuing to show, where we have a rising rental market here. And based on that, guys, that growth rate of, let's say, $50 per year, we might be looking at a market here that at the end of 2025 could be sitting at around $520 per week. And to me, to be honest, I think that's still a very affordable rental market, particularly when you start to compare that to capital cities and then your sub satellite cities around Sunshine Coast and the Gold Coast. I know Brisbane right now, the average rent is about $900 to $1,000 a week. Same goes for the Sunshine Coast and the Gold Coast. But then you come up, 4 hours up the road and you come to Bundaberg and, you're $300-400 cheaper in terms of, that median rent. So I think there's a lot of affordability in this rental market there relative to incomes, because incomes is the kicker in all of this, right? You need to have incomes to be strong, and incomes need to be relative to, what you're paying per week to establish if there's any affordability in the marketplace. So I think household incomes in Bundaberg are really healthy, and I think they've got enough there to sustain, at least a median rent per week of around $700 per week. So there's a lot of wiggle room in this rental market to continue to grow based on those average household incomes in and around Bundaberg. And we actually see that happening right now in certain suburbs, right? Particularly the nicer areas around Bundaberg. For you to rent like a really good 422 executive style home is probably going to cost you now upwards of $700 per week anyway. And I'd probably say on the lower end, you're probably looking at the older stock, the Queenslanders and the cottages in and around sort of the inner middle ring of Bundaberg. In the older suburbs like Swenson Heights, like Millbank, like your Avenel Heights, you're probably looking at, between $450 to $550 there, which falls in line with this overall median. So look, this is a really good thing for Bundaberg that the median rents are rising. So for you as an investor, you can potentially come in here, particularly if you're buying well and truly under that median of, let's say, you're buying at around $550 and you're getting close to, $500 per week rent. You're in the fives there when it comes to your yield. But obviously, on a property by property basis, you might be getting $600 per week on a $550 spend, or $650 per week on a $570 spend. It varies, right? So make sure you go in and do your individual research. But the good thing is that I think there's a lot of elasticity in this median rent to continue to grow in the short term. And I think over the next 3 years, we're likely to see ongoing rental growth, particularly if new supply remains low. There is very limited new construction, right? New investment stock being built that floods the market with alternative options to rent, like medium density, high density in the form of apartments, units, and townhouses, and then also, your freestanding dwellings. Obviously, that new supply could come in and really create a slowdown in that rental demand. And then obviously, what's happening at a macro level, if there is an economic shock and population movements don't occur and people aren't coming into the area, obviously that could have an adverse effect on vacancy rates as well, and play into the fact that, hey, this median house price is likely to slow down going forward. So look, I don't think that's going to happen anytime soon. Those new supply threats, I think for the most part, construction is pretty grim in Bundaberg, and we're going to be looking at that building approval data shortly. So this to me suggests that yeah, we're in a rental market that is growing here, guys. And providing that vacancy rate remains low, also, I think we're going to continue to see ongoing median rental growth in this market. I'm going to be looking at the vacancy rates now. So we've just seen the rental market do double-digit growth in the last 12 months. And the vacancy rate really, as I said, can play into the fact that, hey, will or will we not have rental growth going forward? And generally when vacancy rates are low, that means that rents have a tendency to go up because that just means that there is very little competition in the marketplace. So as new properties go online for rent, they're constantly going up in value incrementally and not going back in value and decreasing, right? So when things are going up incrementally, we are having a rise in median rents. So the vacancy rate really plays into that, right? And all the vacancy rate is how many properties are available for rent at any given time in the marketplace of Bundaberg. So right now we can see that the vacancy rates for Bundaberg currently sits at 1.1%, and it's actually continued a downward trend, right? So it's continued a downward trend over the last few months, dropping to that 1.5%. And this equates to a total vacancy figure or number of roughly 54 properties currently available for rent in the current time of January 2025. So you can go to that red circle there and you follow that back, you can see that it's dropped off and it's had a downward trend over the last few months. So it's dropped from an average of going back around September last year from about 70 properties per month, now sitting at around that 50 properties per month. So about 20 less properties there, which is a good thing to show that supply is contracting now over the last couple of months, and we're starting to move closer to that 1% vacancy rate. But for the most part, you can see that trend, over the last 5 years started to go up from as low as what it was, 0.6, when going back 5 years ago, it sat on average around 30 properties for rent at any given time, now pushed up, going back 3 years to around that 40 properties are now sitting at 50. So every year it's probably increasing by only 10 properties more, which isn't a huge number. So it's probably nothing to be too concerned about because Bundaberg, as a population center, it's close to over 100,000 people now, and to only have the best part of 50 properties available for rent at any given time is quite low, right? And a lot happening at a macroeconomic environment suggests to me that that's still low. What we don't want to see, I think, is that vacancy rate to continue its upward trend long term and push well below that 1%, moves on to 1.5, goes up to that 2% mark, and that's when it starts to really get into a rental market there that doesn't have any really good data to suggest that there is going to be rental growth there, obviously. And by looking at this, we're starting to see a small change in trend now where it's moved away from going up and it's now coming down. And if we keep an eye on that over the next coming months and we continue to see that going down, we're going to see continued rental growth. If that continues to grow and go up, then we might see really small rental growth, I think, in the next 24 months or next 12 months, sorry. And then the next 24 months could be quite grey there if there is, this rising trend. So, yeah, let's wait and see what this data says, guys. But for me, right now, I think the vacancy rates are healthy. We are seeing rental growth in the market, and we are seeing an environment where supply is low from a new supply point of view. And that suggests to me that, the rental side of the market is looking pretty good for ongoing growth in 2025. All right, so if you're going to be investing in Bundaberg for the long term, right, I think when you look at the new supply pipeline, it's going to give you some really good confidence that, hey, Bundaberg is a place to invest in the long term. Because we've looked at the point in time data right now, we've looked at the trend over the last couple of years, and we've seen Bundaberg sitting in an environment where supply has been really low, right? It's sat well below 1% for a long period of time there, and as a result of that really low supply environment, we've seen really big capital growth numbers, right? And just in the last 12 months alone, we've seen double-digit growth, right? Now, to invest in Bundaberg for the long term and if you want to have ongoing and sustained capital growth, not only in 2025, but in 2026, 2027, you need to be able to look at the pipeline of supply. And obviously the pipeline of supply is going to determine what's likely to happen to that median house price. Because if you are in a market where there is a really high level of supply injected into the marketplace, then you could be holding an investment there where supply exceeds demand, and then that could have an adverse effect on median house price growth, right? And the only way we can measure the supply pipeline is by looking at the building approval data. And then to determine if that building approval data is good or not, we want to try and benchmark that against previous years, right? Um, and if that building approval number is lower than previous years, you know that we're in a marketplace where supply is getting tighter and tighter because developers and investors and businesses, whether they're commercial or residential, aren't out there pumping money into the economy and getting new construction built, right? And that can be a problem when it comes to the supply pipeline. And now, by looking at the point of time data for Bundaberg, we can actually see that in the last financial year, there's been 302 building approvals. Now, what does that mean? Is that a good or bad thing? Well, the only way we can determine that is by actually benchmarking that against previous years. So we can see here that, going back the last 5 years, it's been the lowest it has been, right? I think the last time building approvals sat below 300 in a financial year was during 2019 to 2020, which was, for the most part, COVID times. So the construction sector really slowed down then. But over the last 5 years, after that, we've seen, building approvals sit around 600 and 500 and tapering off now over the last couple of years from 400 to now 300. So we're in a declining market here where building approvals going down. So that means that the pipeline of supply going forward is looking pretty grim. So that could mean a good thing if you are looking at investing in Bundaberg and holding your asset for the long term, because there appears to be a real contraction here of new construction. Because what actually happens with building approvals is that they get approved, developers then mobilize their finances to get that project bankrolled, and then they go through a construction phase, and then that new supply comes onto the market. So to see this number sitting at 302, that just shows that, I suppose, Bundaberg in 2025, 2026, 2027 is likely to see supply being really low. And if that supply level continues to be very, very low, I can't really see it then spiking above that 0.2%, because it's really maintained that 0.2% average, even with higher building approval numbers in financial years previous to last. So that's very, very interesting, guys. And I think going forward, like for me, long term, Bundaberg gives me really good confidence as an investment location, knowing that supply, for the most part, is pretty grim based on current building approval data and based on the last 3 years where the trend has been really declining. And obviously there's a lot of things that play into this, guys, but I think for the most part, it's the construction sector that's really taken a hit here, guys. It's really taken a hit. So what that means now going forward is a lot of competition now will start to emerge, and it has for the last couple of years, where people are fighting over established stock, right? Because there's no new house and land packages being built, nothing with the new shiny bells and whistles. People have to go back and fight over the established stuff that was built 20 years ago, 30 years ago, 40 years ago, 50 years ago. So I think from an investment point of view, my tip would be, if you can target those areas where there's still really good established stock that has been built in the last 20, 30 years, that is in good condition, I think, for the most part, they'll be the ones in very strong demand going forward, because there is no new properties being built at a high enough velocity to keep up with current demand levels in Bundaberg. All right, guys, thank you for sticking around, and I hope that's been really valuable to you, and you got some insight from that market update, and you got everything you need to potentially navigate the marketplace now, to potentially not pull the trigger or to pull the trigger. And I wish you the best of luck for that. But Look, after evaluating, that data, the hypothesis I'm forming here is, my predictions for 2025. I think for me, two things, right? If the absorption rate continues its trend, right, and we've seen that really declining absorption rate from as high as 90% now down to 55%. If that continues to happen, where a lot of properties are going into the market and they're not being sold, we are likely to, I think, only see single digit growth in Bundaberg this year. I don't think we're going to see double digit growth. So that's something to keep an eye on, guys. And all you need to do if you're an investor and you are looking at investing in this market and you want to keep an eye on this data is just calculate the amount of listings and divide them by the amount of sales, right? Or the other way around, sorry. The amount of sales divided by the amount of listings over a period of time. I like to use 6 months as a healthy gauge. You could use 1 month, 2 months, or 3 months. It's up to you. I like to use six. And that will allow you to measure the overall absorption rate in that market. And like I said, you want the rate to be around 80% or above to know that you're in a really hot market. A healthy market sits at around 70%, and then you started to move into a market that's not as heated, that's relatively flat, doesn't have much competition in the market when it sits around that sort of 55, 60%, which is what Bundaberg is showing signs of right now. So that, I think, as a result of the absorption rate, I think we're likely to see single-digit growth in Bundaberg, guys. And now, from a rental side of the market, if vacancy rates continues to tighten, and we've seen that trend start to really go down now, it was going up over the last couple of years, and then over the last couple of months, it started to go down. If we're starting to see this trend continue on in 2025, where it continues to get tightened and it falls under that 1% vacancy rate, I think we're likely to see double-digit rental growth in 2025 in Bundaberg. I think the market right now, sitting at around 1%, I think it's tight enough anyway to still sustain double-digit growth, but we want to continue to see that vacancy rate going down for really strong double-digit growth. And there's a lot of affordability still in this rental market with household incomes very strong relative to those median rents. So I think for me, single-digit capital growth and double-digit rental growth, providing these data points play out the way they are playing out currently. Anyway, guys, I hope you got some value out of that, and I'll see you on the next video. And before I do, I just wanted to say my name is Troyson Bassini. I'm the owner and head of research of Capricorn Life Buyers Agency. And again, if you are an investor that needs help navigating the regional Queensland property market, feel free to reach out to me and the team. Cheers, guys, and I'll catch you next time.